Phaswane Mphahlele from Makwe Fund Managers joins us now for a full look into the day that was in markets. Phaswane, thanks so much for your time. Just contextualize the mood in markets for us. I mean, from my standpoint, it really still looks like caution remains the name of the game as we await key economic data out of the US as well as Nvidia's results. That nervousness also spilling through to the local markets, with domestic tailwinds, of course, being capped by the sour global sentiment.
Afternoon. Well, when we look at the markets, you're very right. There's been a lot of cloudiness that has been in the markets. We've seen it over the last 2 weeks. We've seen the VIX rise over 20, reflecting this uncertainty. And the core thing is at the back of those interest rate decisions in the US, whether we've moved from high probability to a trend cost to below 50%. Investors are now questioning whether, if the data that has been delayed is coming through, it is expected to show inflation coming down, labor, whether it would be enough for the Fed to now maybe say, let's push the rate cut over to next year. This is what concerns investors at this point in time, and it's clouding the nice South African workout their developments, whether you think from grey listing to being upgraded. That's been very positive for the bonds, for the rands, and even the equities today. We've seen early signs on the equities front, financials doing well. So it's just that global development that is causing concern, and we'll still continue to see investors continue to shift shape between buying some dollars, some bonds, and even some putting some gold just to wait and see this end, your fourth quarter end.
It'll be very interesting to see what comes out of those Fed minutes, because it was at that minute where Fed Chair Jerome Powell did warn that the December rate cut isn't a given, and we even saw bets shift from a 90% expectation of a rate cut to below 50%. Okay, let's shift focus to what's playing out here at home. Lots of numbers to digest. Let's start off with 91 assets under management, up by double digits. No surprise there, right? Considering how strong markets have been performing, and now that we are starting to see a bit of the gains from that Sanlam partnership coming through.
Yeah, well, you well said there. Yeah, no surprises. Solid results coming from there. The guys were taking advantage of that upswing in investor confidence, especially in the emerging markets. We've seen they've showed positive inflows around £4.3 billion. That has done well for them, helped them. The partnership with Sanlam was well for them. They've increased their assets under management by 19% to 152 billion, leveraging that global performance and the strong rebound in emerging markets. It's reflected in their profitability, and we've seen their operational profits are up. EBITDA earnings is rising nicely up, and it's reflecting the guys are enjoying some efficiency gains. They've given the slice to shareholders, which is a positive. And now for that momentum to hold, it requires us to see that continued rotation that is expected into emerging markets.
Yeah. So while we're seeing profits rising over in 91, on the other side, Barloworld profits taking a knockdown 21%. Of course, this on the back of the troubles faced in Russia. And they've kept that unit even as we've seen tensions within, or rather between Russia and Ukraine intensify. Are you still paying attention to that counter, considering that it is about to delist?
Nah, I'm not really paying attention to it, but it was interesting when you read their numbers. It's a mixed picture. Yes, the revenue down by those, the top line due to those Russian operations due to the geopoliticals and then but when you strip it out, it tells you the industrial counter is still facing a bit of challenges when you think of the global, how volatile the global market is currently. The demand is easing, and it's punishing the top, the profits down 21%. That the dividend trend even showed you that guys, things are not necessarily going well. So, but the guys, they still not some green shoots. They showed cash flows are rising significantly. They paid down the debt. The guys are going to stabilize and delist and work on dealing with the business overall, not under the spotlight.
And market's not really punishing that counter as much. The graph there showing that it's up 0.17%. All right, let's get into your stock pick. Where are you seeing opportunity at the moment?
I'm seeing opportunity. I'm taking buying opportunity into MTN. I think I like how the guys are setting up their digital growth thanks to the margin expansion and the cash generation. They've shown that the demand is strong on data front. Fintech is showing early monetization, and it's just you have changed the profile of earnings, sitting healthy, and the big turnarounds when you think of the likes of Nigeria, Ghana. They've set out those big risks when we look at MTN. They've been settled. Yes, South Africa is seeing some bit of a challenge, but with the upswing in the South African market that is going to take in, I think the guys will be able to recover nicely on that. So I'm taking a dip there.
And to be fair, most of the local telcos operators are, experiencing a tough time here at home, with the exception of Telkom. All right, let's leave it there. Phaswane, thanks so much for your time and sharing your insights with us this evening. That was Phaswane Mphahlele from Makwe Fund Managers.